trading or both. But you asked the question about, we talked about risk management and expectancy ratios, and how do you go ahead and ride those trades to collect more profit? Well, on the day trades, so it's a little bit different on the day trades versus your swing trades. On the day trades, you want to pay attention to, just like we always do, you want to pay attention to price action. You want to pay attention to whatever indicators that you're using. But you also want to pay attention to, is the trend that we're talking about going against the major trend, the longer term trend? And if it is, you have to be aware of that to be able to take profits a little bit quicker than you would if they were both going in the same direction. So that's so on the trades for day trading, you're looking at just being much more aware of pulling profits off a little bit earlier. And maybe now, like on this trade here, so this is all showing bullish right now, but maybe you say, I want to leave a piece on. So maybe you had 5 contracts on this position, and as it moves up, and you're saying, man, I remember what Bruce said, we're going against the major trend. Even though this is bullish, we're really still in a bearish movement. But I'm gonna take, out of my 5 contracts, I'm gonna take 3 of those contracts off and let 2 of them ride. So you have to be thinking about things like that to be able to maximize your gains, because now it's broken this ascendant triangle. If it keeps running, you want to capture as much of that as you can. So you don't have to, it's not a, hey, I went in with 5 contracts, let me take everything off the table. You want to be able to say, I'm aware we're going against a bear movement right now today, but I want to let this ride. I'm taking three of my contracts off and letting 2 of them ride. So you can do that. On a swing trade, when we go back to the swing trade, well, like as we were talking about Shopify as an example, and we look at this and we say, well, this stock has had that pullback on earnings, but I still believe in the stock. I want to ride this longer term. How do I do that? How do I do that in a market that's choppy? And I see that there's consolidation here around the $40 area, but I want to go longer term because I think, in the next 4 or 5, 6 months, Shopify could be right up to about $55 a share. Well, that's where you have to design an architecture trade. So now all of a sudden you say, I'm going to purchase the $45 call options as an example. And as I enter this trade, you want to think before you enter the trade, you're thinking, how do I reduce my cost basis to the point where the market's paying for my trade? And I have no money invested, but all the upside. And that's where you start talking about being able to do sell and call options against it, where you're collecting that dollar premium or even more each step along the way. You're collecting that dollar premium more each step along the way. And you do that in March, you do that in April, you do that in June, you do that in July, and you're adjusting your trade each step along the way. By the time you get out to September, you've almost had the market pay for that entire trade, and you've adjusted each step along the way. And now you're riding your longer term trade with less risk because you've properly managed that trade. You just didn't get into it and said, let me close my eyes and hope for the best. You're actively managing your trade and reducing your cost basis so the market helps you pay for that trade. Maybe a portion of it, or maybe even all of it. And that's the way you ride these longer term trades. Does that make sense, Jamie Duke?
Yeah, that helps a lot. Yeah, that's a big part of maximizing rewards.
Yep.
Wow.
Absolutely.
I know we're about out of time. Let's see if I have any brief questions. Probably nothing brief enough.
No problem. We can schedule it again for next time. Just let me know what part you want to talk about. I have some ideas of my own, but okay. I want to make this more for you and what you're actively doing in the marketplace.
Yeah. I do want to tell you, I'm going on vacation for about the next 3 weeks or so. So I'm going to have a dead zone where I'm not trading the markets. I'm actually going to take a break for once. That's going to be nice. So nice. So it'll probably be a few weeks out, late March, before we will have time for another one.
Sounds great. Sounds great, Jamie Duke. Well, hopefully this session was good for you.
Yeah, I think that did help a lot. And yeah, I'm learning a lot. Just getting used to I think I need to get a lot better at managing the trades than I have been. I think I
Yep.
did do a lot of set it and forget it kind of things. Just I had a stop and I would follow the stops, and that's better than nothing. But other than that, I was just kind of like not really able to manage it or maximize those gains. So
Right. Yeah, I mean, if that's all you know, you're in the markets and that's all you know is to put a stop, then that's the best thing you can do. But that's not where you're at right now. So now it's about being very, very selective on the stocks that you get involved in, knowing them intimately, and then being able to manage them effectively, not just hold them, but being able to continue to, especially these longer term trades that you're getting into, being able to ask yourself, how do I have the market pay for a good bulk of this trade and take my risk off? And that's what trading is all about. Effective trading.
yeah. Wow. Okay. Well, thank you so much. And yeah, appreciate the session.
You got it, Jamie Duke. Have a great vacation and hit me up when you get back.
Okay. Yeah, I'll let you know when I return, and I may even take a little bit more time off once I return, just to instead of being heavily trading, working on some of the background stuff, my journaling system and stuff like that. So it may be early April. So
Okay, sounds good.
but yeah, thank you so much. I appreciate it.